Okay, here we go. What's up, everybody? Welcome back to the Marketing for the Uninhibited podcast. Today, we're finishing our 3-part Ask the Accountant series with Theresa Rubino, who is my accountant and CPA at Rubino Tax. And you can learn more at rubinotax.com. And today we're diving into donation versus gifting. And this is a topic that's coming up a lot right now. We are coming up on the holiday season. There's going to be Giving Tuesday right around the corner. So she's just going to outline what the difference is and the misconceptions, and then how best we can donate and give back to our communities and our partners. So we didn't talk about where we're going to start.
That's okay.
So wherever you want to start, go ahead.
Sure. So, it's really funny that this topic came up because, first of all, I'm bad at marketing. I just let that be known. I'm the worst at marketing, and I rarely ever do it. And this came up with a client. I'm like, oh my gosh, I should totally do a Facebook Live on this topic. It was like 6 months ago.
Oh my gosh.
And I never got around to doing it. So then you and I started talking, and it came up. I'm like, gosh darn it. Okay, we got to talk about this because it does keep coming up. You're right. And especially now in light of the pandemic, the reason this came up with one of my clients is they really wanted to give back. And so they started donating, and they didn't contact me first. And then when we did talk, I had to be the bearer of bad news.
Right.
Like, that's not deductible to you. So I think it's really important for business owners to know what they can and can't do.
Yes.
That being said, so let me just explain the difference between gifting and donating.
Mm-hmm.
Individuals and businesses can both donate. They may or may not be tax deductible, which is another issue, but only individuals can gift. Businesses cannot gift. In the tax code, there's a big difference between a donation and a gift. So briefly, I'm just going to explain what gifting is, because my guess is most people are in the donation category. But gifting, per the code, any individual can give anybody else up to $15,000 per year tax-free. So if I wanted to give you, Miranda, $15,000 because I just like you so much,
Yay.
I can do that. And guess what? I don't pay any tax on that $15,000, and nor do you pay any tax on that $15,000.
Got it.
But if I give you $15,000 and one, now I have to file a gift tax return. Okay. So, and I won't get into that because that's just a whole other thing. But that essentially is what gifting is. Donating or donations now, individuals and businesses can donate. If you want to donate to a non-for-profit organization and receive a tax deduction, then that organization needs to actually be something like a 501c3. They need to be set up as a proper organization. What does not count as a donation, that gets listed as a donation all the time, are GoFundMes. Right? You hear about all of that, and they're wonderful things. People go out there and they start a cause and they want to raise money for maybe a family that's having some trouble or something like that. Those aren't donations because they're not a 501c3. They're not a non-for-profit organization. Okay. So the recipient of the donated money needs to be organized as an official non-for-profit organization in order for the amount to be eligible for a donation. So there's you got to love the tax code, right? They don't make it easy.
So can I just interrupt 1 second? So then is a GoFundMe a gift? Like if I don't...
Yes.
Okay. So I gift $25 to someone's GoFundMe and they receive it as a gift.
Correct.
Okay.
And I'm glad you brought that up. So the GoFundMe recipient, let's say they got $16,000 in gift, but it's from all different sources, right? So that's fine, as long as they're not receiving more than $15,000 from one person.
Okay. Yes.
So, a married couple essentially could give $30,000 to their child, and it's a gift. It's okay, because each one gives 15.
Got it. Okay, that makes sense. And then how do we verify that the organizations we are donating to, not gifting to, are certified not-for-profits where it would be considered a donation? That's something that it should be clearly stated on their website, right?
It should be. It should be. You can also ask them if they are. And also, technically they are supposed to generate a tax letter. If you donate more than $250, they should send you some written correspondence saying that they received your donation. Anything under than that, they don't have to do that. So they usually won't.
Okay. So then it's your own personal record keeping again, if that's something you want to bring up at tax time.
Right. And it really is the responsibility of the donor to make sure that they know who they're donating to. So I know that there's a lot of telemarketers out there that call, right? And it sounds like a good cause, like usually for fire or police. Are they really organized as a 501c3? You know, I always ask for them to mail me something. Inevitably, they never do. So, you know, there are people out there that will scam a little bit. So, but the responsibility really is on you, the donor, to know who you're giving your money to. So however you need to find out if they're a tax deductible organization, that you have to do.
And is there, because I know, are there limits for donation levels? Like I thought at some point this could be way off, but if you weren't donating over $500 a year, it didn't matter whether or not you kept track of it.
Right. Okay. So yes and no. So when it comes to donating goods, products, goodwill, old clothing, things like that, right? Usually if it's under $500, you can just claim that amount and the IRS won't look any further into it. If it's above that, you really should itemize that out. That being said, we might as well get into what is eligible for a deduction, what isn't, which is a little bit more complicated now than it used to be. So in 2018, we had the Tax Law and Job Act. I should know the name of that. And anyway, we had a new tax code in 2018. And it changed everything. And how it changed it is it changed the standard deduction for individuals to take. So we used to have, or we still have, you can file singly, married filing joint, head of household, or married filing single. Those are our filing statuses. The amounts went up with the new tax law. So I believe in 2020, the single exemption is now up to $12,600, and don't quote me on these because I haven't looked yet. And then married would be whatever that is double. It might be 12.4 and then 28.8.
Okay.
Filing joint. How that comes into play is any donation you make as an individual would get listed on your Schedule A on your individual tax form 1040, and that's what we call itemized deductions. Other things that go on that form are like mortgage interest, real estate tax. It used to be that between mortgage interest and real estate tax, that was enough to give you more itemized deductions than whatever that standard amount was. So people would itemize that, and then they would add in their donations. But the tax law changed all that because they did two things. They raised the standard deduction, and they put a cap on real estate and state income tax.
Okay. That
cap in the state of Illinois is $10,000. So that means if you pay $12,000 in real estate tax, you can only get up to $10,000 deductible. That other two is lost. And furthermore, let's say you pay, I pay $8,000 in real estate tax. Awesome. But I paid $5,000 in state income tax. That together is $13,000. I only get $10,000.
Wow.
So that is lost.
Okay.
So because of that, what has happened is far fewer people have enough deductions to warrant itemizing. So they end up taking the standard, which means all those donations you made throughout the year don't become tax deductible. So it really depends on how much itemized deduction you actually end up having.
Okay. And so this is for personal stuff.
Mm-hmm.
And then should we shift back to the business?
Yeah. So let's talk about that because actually with the business, of all the structures, so we've got, I'm just going to do a quick overview. There's 5 business structures. You can operate as a sole proprietor, LLC, partnership, S corporation, or C corporation. Of all of those, the only structure that can deduct a donation as a business expense is a C corporation. Okay. All of the others get treated as if the individual made the donation, which means everything I just described as far as on your Schedule A, your itemized deductions, all of that goes there. So this is where the catch is, right? We've got a lot of small business owners, either LLCs, S corps. They want to get out there. They want to be philanthropic. They start saying, I'm going to donate proceeds of my revenue every month, which is wonderful. And it's great PR. So don't undervalue the PR element of it.
Yes.
But when it comes to the tax deduction, unless they're a C corporation, that gets considered an individual donation. So it would go on to their individual 1040, and it may or may not be deductible depending on the rest of their tax situation.
Right. So then in a situation where, let's say I have a product, I make a product, and during the pandemic, we saw a lot of this, people donating proceeds of their products. So if I sell jewelry and I say with every sale for the month of October, 10% will go back to, let's say, Mutual Ground for Domestic Violence Awareness Month. How best do you set that up? And then what type of, like as a consumer, and I want to buy that jewelry because there's money going back, what type of questions should I be asking to the business owner to make sure that that is all working how they say it's going to work?
Okay, so let's start with the second half of your question. From the consumer, they might want to just verify how the proceeds are getting to the organization to make sure that that is legit. So
Right.
That's just a matter of asking them a question.
Okay.
That's what I would say. I mean, they could call the organization if they really want to make sure that the
Right.
business owner is being honest, but I would just ask that. But then the first part of your question, from a record keeping standpoint for the business owner, I would put that 10% of proceeds of income into some sort of donation category on your books.
Got it.
But just know that when it comes to tax time, unless you're a C corporation, whatever that donation amount is, will actually get processed, that it will be treated as an individual donation on your 1040, not on your corporate tax return. So it will not lower the business income. In fact, I would do this. If you're like an S Corp or any of the other entities that I talked about, I would set up that donation category as an other income or an other expense item, which will be at the bottom of your profit and loss statement.
Yep.
That way you can kind of see your net income before going all the way down to the very bottom, because that actually doesn't lower that income.
Okay. Yeah, that makes sense. And then just to reiterate the beginning of this part, when you were talking about businesses can donate?
Businesses can donate, absolutely. Okay. It may or may not be deductible.
Got it. Okay, but they cannot gift. Only individuals can gift.
Exactly.
Okay. Wow. Yeah, this I think is a really important one for people to clarify, because a lot of people do use it, and I hope they use it to do good. And it is part of a marketing thing too, or PR in general. So just being aware of how that works. And then always asking an expert for advice is advised, right? Like asking an attorney, not an attorney in this case, a CPA, like call your tax person.
Absolutely. I mean, when it comes to something like this, because, again, going back to these entity structures, every one of them have their little nuances as far as how taxes are treated, depending on what your structure is. And this is a great example where what might seem like, oh, this is great, I have a business, I'm making money, let me donate. It's like, well,
right.
If you just want to donate, that's great. And I'm not trying to deter anyone from it. Just don't be surprised when you go to have your tax return done. Right. You're like, wait a second, I gave $20,000 away in donations. Like, well, you did, but it doesn't count. So it's actually income to you. You still have to pay the tax on it. So it can have pretty large implications depending on what type of amount we're dealing with.
Yeah. I mean, and if you're doing a good job of generating awareness around your cause, then you should be looking at big amounts of money. So is there any other advice for people who are looking to make an impact? Is there any other way you would structure it to their benefit? Can you hear the dog?
I can't actually. I'm surprised mine are so quiet. I'm like getting really lucky right now. Again, I wouldn't underestimate the value of good PR, right? So depending on what your business is, especially if you have a physical presence in your business, maybe you could have an event for an organization you care about.
Right.
You might be able to work in partnership with a certain organization where you kind of co-promote one another. Mm-hmm. So there are other things you can do as a business to give back and to help an organization that you're passionate about. aside from trying to get the tax deduction element of it. So I would say look at different PR avenues, because again, depending on what you do, that may really help serve you.
And does that mean, okay, so as a business, Marketing for the Uninhibited, if I decide to sponsor an event for a nonprofit organization, let's say locally, then that sponsorship, how would I categorize that in QuickBooks? Is that just like general public relations because it's a sponsorship?
Sure.
Because,
I mean, so if you're not giving money to the organization, but you're going to spend money, right? I'm going to buy, I'm going to have some food. I'm going to have some music come in. I'm going to actually have an event. It's an event expense. It's an event for your business,
If they do it, because I know I've worked with a lot of nonprofits like on their boards and for events. So for example, if they say like for a full table of 10 at our event, it's, $5,000. And as a business, I want to get a full table of 10 at this event for my employees. Is that considered PR or is that considered a because you're giving them a check for $5,000?
Yeah. You're asking a really good question.
This is good. Yeah, I don't know because
go ahead.
When I worked at the restaurant, that was how, and if you've ever worked somewhere like a restaurant, you've seen the solicitations from charities asking for event sponsors.
Yeah.
So, here and they're always tiered. So like for a gold sponsor, it's $10,000. For silver, it's $5,000, and for bronze, it's $1,000, and you only get like one chair or whatever.
So this gets into an area so full disclosure, I would have to double check and research this, but there is a fine line between sponsorship and advertising.
Okay.
Right? Advertising is fully deductible, no questions asked. Sponsorship, depending on how the non-for-profit is receiving that money for sponsorship, if they're receiving it and treating it as advertising, it's deductible to you, but now it's taxable to them.
Interesting.
So it gets, it's definitely a gray area. And I know there are distinctions that have to be met in that. So I don't want to give a clear answer on that.
Okay, that's interesting. So because there's always an advertising component at each level of sponsorship. Like, at the highest level, you may get a full page ad in their event booklet. At the lowest level, you may just get your logo thrown up on the screen, but that would warrant advertising for the money you've spent.
So yes, if they call it advertising, then they're treating it as advertising. So they must be paying tax on the money that's being paid to them to advertise. There are acknowledgments that profits can give corporate sponsors that aren't advertising, but they're merely acknowledging
their participation.
Yes, which means they're not paying the tax on the money, which means you're not going to get the deduction.
Oh, wow.
Yeah.
Oh, I think we just
it gets hairy.
Blew open a topic here. Yes.
We did. And I was not prepared for that.
Sorry, it just came up, but that's very interesting. So I would say again, as a not-for-profit or someone contributing to a not-for-profit in this aspect, to consult your CPA.
Yes. And if you are wanting to sponsor an organization, you might want clarification from them how they're treating that sponsorship. Are they treating that as advertising or not? Because if it's like, oh, yes, it's an advertisement, then it's an expense. But if they're like, well, no, it's not really an advertisement, but we mention you and we thank you, then then there's more to look into. Yeah.
Interesting. Okay, I'm going to pause before we do closing because this dog is going to lose his mind. Okay, so I guess we'll have to close this out now with this puppy here. Okay, so that was I think that was a great summary of donation versus gifting. So the most important factor is that individuals can gift, businesses can donate, but depending on the way your business structure is set up, and then your individual.
Yeah, depending on your business structure, a business donation may or may not be deductible. Again, C corporation, absolutely deductible off the bat. It's a business expense. Any other structure, it gets treated as an individual donation, and then it depends on the rest of your tax situation whether it will be deductible or not. And then one other thing, if I could mention, I forgot about this before, another opportunity. You almost made it through. That's Bella.
Oh my gosh.
It's deep. I can feel it in my chest. Should I just talk over her?
Yeah.
Oh, no, she's going. Okay. The other thing I want to mention is if businesses want to donate and they want that tax deduction, another opportunity. I recently met a person who works for a merchant services. It's called the Merchant Giving Project. And they're actually set up as a 501c3. If they process your credit card transactions of the merchant fee that you pay, they will take a portion of that and donate that out to charity. So what that means is you as the business owner, you're just paying merchant fees. 100% of your merchant fees are tax deductible.
Wow.
Of those merchant fees, if you use something like the Merchant Giving Project, they will actually donate to other charities. And I believe you can pick the charities you want it to go to.
Okay.
Yeah. So I just want to put that out there. It's something worth looking into if people are interested in that.
Yeah, that's a great option. And I think that asking an expert and then investigating the options before just committing to one is a good rule of thumb too, just so you know that you're making the best decision for your business and for the contribution you're looking to make. And then as we wrap it up here with our whining and barking dogs, we almost made it. Yeah, they have. I just want to give you an opportunity to let everyone know about the course you have coming up and then how they can get in touch with you.
Sure. So I've created a series of online business courses called Solid from the Start. And the first one is creating the foundation for your business. And we cover all of the different entity structures that you can choose from. The second one is records you can rely on. And we're covering all the ins and outs of record keeping, the importance of keeping good books and things like that. And I'll actually go through that course. I'm probably going to enclose a chart of accounts to get people started, maybe even a starter Excel spreadsheet that they can show their income statement. So all they have to do is plug it in. The calculations will be there for them. And then the third one in the course is going to cover taxes, which we all love.
Yes.
You may or may not want to know all the stuff about taxes, but it's an important thing to understand. So some of those hopefully will be ready by the end of the year. The taxes one probably won't be ready till 2021. If you want more information, you can go to rubinotax.com and either contact me and say you want to be on the waiting list for that, or at some point I will have a link to get directly on the waiting list.
And I will say, even if you plan on hiring someone to help you with this, like Theresa, or another CPA, just having a general understanding is helpful, so you know what questions to ask and what you're actually looking for when you check your bank account and track your numbers internally, because you're still going to have to do those things. Whether or not you hire someone, you should be paying attention to that stuff. And so just having kind of a baseline knowledge of this information will take you so much further, even if you're hiring someone to help you throughout this process. Thank you so much for being here. I appreciate it. It's been a very informative 3-part series. And now he's hungry now. He's like, where's my lunch? Right? We have all of our dogs present.
Exactly.
So thank you. I really appreciate it. And I love working with you. So if anybody's on the hunt for a CPA, Theresa is wonderful. So I highly suggest it. And she's very helpful. So feel free to reach out just to for a consultation. I don't know if you call them consultations, but
I do. And honestly, I'm happy to talk to anybody for free. I'll give a free phone call, free consult for like 20 minutes if you've got some questions. I'm happy to offer that.
Great. Thank you so much for being here.
Thanks for having me.